All right, guys. I was watching Kid Code the other day and I saw this really great episode featuring an interview with a guy named Steve Penny. He's also known as the Silver Chartist. And he had a great interview, made a cool call, an interesting call about where he sees the silver price going by the end of the year. And he basically said that he sees it below 30 and above 20. And within that range, I would generally agree with him that, we'll probably see silver around that. It was within that price range, even going into the end of this year. And you might ask, well, why do you think that, TJ? Don't you think it'll like soar even higher? Here's the thing. With my forecasting models here, I was trying nonstop to essentially get this guy over $30. And I was just playing around with numbers here pretty much. And what I found was I was messing around with CPI. Currently, the CPI is around 273. I was messing around with the US 10-year real yield. Currently, the real yield is at around like negative 0.84. I was messing around with SLV volume. Currently, we had it around like 500 million or so. This is monthly, by the way. And I was messing around with those three mainly. And it was hardly making a dent. Then I started to push the gold price up. And I did that after working with my monthly gold forecasting model. Essentially, what I did was I made some of the same assumptions. Let me go back to 276. And I'll make this -1. Let's just do -1 right now. -1. And when I did this, gold right here is at 1931.13. So essentially, these two metrics right here were playing a huge role on the price movement or the price of gold. Currently, I would say normally on average GLD volume, we should expect it at like 200 million. And that brings us down pretty significantly. So if we're on a run for gold, because many people use GLD, that's the reason why I have GLD volume here. 1931 is where we would be. So gold is on a run, essentially, based on the fact that CPI is up and it's bringing down the real yield so aggressively that it's down to -1. Now, remember, the real yield is at -0.84 and the nominal yield is rising right now. And in my view, I expect the nominal yield to continue to rise by the end of this year. So we need to make some assumptions here. If the nominal yield is expected to continue to rise, the only way we can expect this guy right here to really continue to perform in gold's best interest is we really need to see inflation take hold, and we need to see that OER really take hold in CPI readings moving ahead. And that's something that I do expect to see. So that's an assumption I'm willing to make. So I put the CPI at 276 by the end of the year, and the real yield at -1. I think that's pretty safe to say. USM2 around 22, and let's just say gold is getting a little bit of a run here. So that will bring us to 1931. Okay, so we made those assumptions, 1931. So let's bring that back, put that into the gold price metric here. And actually, let's make this -1 to match it with what is happening in gold. And let's say SLV is having a little bit of a run. SLV usually isn't around 878 million. That's when it's kind of like, making a move. That would bring us to $26.49. After all of that, it only brings us to $26.49. So then it's just like, what exactly is going to bring this guy up after all of that favorability? Why is it that gold is still, or silver is still low? And guys, this is essentially whenever we see favorable things happening for silver and gold, like, oh, the real yield is down, or oh, CPI is up, or da 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 da. I'm going to tell you why I expect, or why I think silver will not rise above $30 unless this one thing happens. Let me show you what that one thing is. Boom. One of the main catalysts, the main drivers for silver really rising will be the gold price. So in order for gold to get to that level again, we really need to see GLD volume really running, and we need to see these guys really taking off. So let's assume that CPI is 280. I'm going to leave the real yield down there. That brings us to 1980. Now, here's the thing. So just one moment. Okay, so let's actually turn this to negative. I'm going to make this negative here. Negative 1.25. We have not even seen this yet. That will bring us to 2035. So let's make this guy run up a little bit more. Oops. I think that might be a little bit too much. Wait, no. I think that was correct. That brings us close. Let's just do this. Okay. So we need to essentially see a big run. We need to see this guy get really low. So inflation really needs to take off, especially if CPI is here. Inflation really needs to take off. M2 needs to take we needs to go up a bit. GLD really needs to take off. All these things would need to happen in order for gold. Let me add that number that we just saw. For gold to really take off and get silver to just be above $30. And again, silver has to make a run. So the thing about this, guys, is that, and actually let me add that number in there just so I can make it all exact. So let's put this at 280. And I think this will actually moderate the silver price a bit. That moderated the silver price to $29.76. So because the reason why is there's a really strong correlation between the gold price and CPI and US 10-year. And there's a correlation with that with silver, but it brings it down a bit more. So we're still below $30 even in that scenario. So guys, the thing we have to realize is that we need the gold price to really take silver, to really help silver rise. I mean, that's 21, almost 21.20. Let's see what happens if we're at 21.50. Okay, now we're above $30. But guys, that needs to happen in order for this to happen. So going back to this original video, you guys may say, well, Steve Penny, that's such a low call. I actually don't think it's a low call. I actually think he's pretty much spot on, because in order for us to see silver really take off, we need to see gold really take off. So guys, let me know what you think about all this in the comment section below.